Faxt often likes to go one-on-one with somebody from the art world to get a deeper dive into what their business is and what their experience is. So today we're going to go one-on-one with Tamer Ozmen of Mintus. Welcome.
Thank you very much for having me here, Josh.
Now, you're not an art world person per se, so before you get into who and what Mintus is, tell me about your background. How did you come to this world of art? What's your elevator story of your CV, and make it fun?
Yeah, so I was in the team that started Priceline.com in the United States, and I moved to Europe to start Priceline in Europe. And then after Priceline, I ended up at Microsoft. And at Microsoft, I was running their advanced solutions division. So I shifted the business into AI and decentralized finance. And then decentralized finance and the financial the world just became very fascinating. And at that point, I started doing a lot of research on alternatives because that's the next important asset class. Actually, if you look at Morgan Stanley and Oliver Wyman's report, they talk about 4 trends that's going to shape the economy in the next 20 years. So the first one is the alternatives, because they're very difficult to access. You have to have so much money to be able to buy them, and not many people can afford them, or they don't have the experience on how to choose them. So that's the first one, alternatives. The second one is the fractionalization, how the technology is making things available to be buying them in pieces rather than buying the whole thing. The third is the shared economy, the Ubers, Airbnbs, and everything has become, with the millennials, everything has become like shared economy. And the last one is the ESG, environmental social governance. So when you put those together, I basically built the model around that. And then the reason art was so interesting, that it's very aspirational. It reflects humanity. It reflects the expression of humanity. And you can go buy, oil shares or, something in the future that just doesn't mean anything. But when you own a piece of a Warhol or a Kondo or a Picasso, that means, something. And especially if you can enjoy that, at a public environment. So with that, art became a very interesting asset class to, launch with.
What exactly is Mintus and its mission?
So Mintus is a fractionalized art platform. We make it possible for investors to buy a piece of a painting. And we go for paintings that are over $2.5 million and above, because when you go below 2.5 million, the volatility goes up. And we have a very unique investment selection process, which I think differentiates us in the industry. So with that, we're opening the market for more investors to come into the art world. So in that sense, we're actually enlarging the market.
So are you a technology company, an art company, a financial company?
Well, we're basically a very technology-driven company, which makes things more available for investors. But we're an art investment platform in that sense.
Because most of your staff are engineers, right?
That's, we have currently about half of the staff are engineers. The rest are coming from the art world. But we also have a very wide advisory network coming from the art world that helps us with that selection process.
Now, I think the most important thing to our audience a little bit is but who are your art experts?
Our chief curator is Brett Garvey. So we have an investment committee. Investment committee is made of art people and finance people. We don't have any technology people in the investment committee. So we have people like Jonathan Matthey, who is the chief operating officer of Baer. And he also was with Sotheby's for about 40 years. And then we have multiple private sales and art experts on the exit side of things. So before we put a painting on the platform, we look at the exit scenarios and then bring the private sales experts, because the Warhol experts are different than the Basquiat experts and what have you. And then with that, the whole origination process starts with the supplier all the way to the exit part, and the art committee, investment committee comes into it at that point.
And what about primary artwork?
Well, that's something that we're very interested in. And what makes Mintus very interesting is that we bring our suppliers, let it be a collector, let it be an artist, they could be part of the platform. So basically each artwork, we look at it as like a joint venture between the supplier. So they can keep certain shares in that artwork, or we can give them percentage of our carry. So that way, either a collector or an artist could enjoy the upside of that painting 3, 4, 5 years down the line.
Obviously, you're going to be compared to the big kid on the block, Masterworks. Is that how you're differentiating yourselves as a fractional shares company from them?
We have a couple differences with Masterworks. First of all, we love competition because they educate the market. From that point of view, I think it's very healthy to have that. They're US based, we're more global. We don't go after mass retail. We go after more accredited and qualified, investors. So our minimums are higher, in that sense. And then we look at the way we select are probably a little bit different than they are.
What is the minimum investment, and where are you able to sell those investments now, and where might you in the next?
So anyone and everyone who are accredited or qualified investor, they take an assessment test on the website to make sure that they're qualified or accredited. In Europe, it's called qualified. In the US, it's called accredited. So that means that you have to have a certain level of income, certain level of sophistication. So individual investors can come in with as little as $3,000 per share. And then we also have various vehicles for institutions. And the minimum there starts at $100,000 and all can go all the way up to $8 to $10 million into those vehicles.
And are there different pools of money depending upon if you're American or you're European, of where you're limited, and are certain artworks specifically for those regions?
So US accredited investors or global qualified investors could come to our website, mintus.com, where minimum is $3,000. European institutions or global institutions can come through this fund that we have in Luxembourg, and the American institutions could come through a fund that we have in Cayman Islands. So we both address institutional investors and individual investors at the same time. They invest in the paintings, which are owned by separate, segregated portfolio companies.
So Americans can buy in.
Absolutely.
UK can buy in. Germans can buy in.
Absolutely. Asians could buy in.
Asians can buy in.
So it's a very global, fund structure and investment structure from that point of view.
What is the return that you're hoping for? And when you have your wins, how does the money get divided up?
So I'll start with the last one. The moment the artwork is sold, the money goes back to the investors, right away. And then we aim to have 20% IRR. That's kind of our goal when we get
But
to
how much? So you buy a painting for $1 million, and 2 years later you sell for $2 million. Million goes back to the investors, but there's that other million of profit. How's that divided up?
So we take 20% of the profits as a carry, which could be shared with the artist and the supplier, depending on the conversations that we have in the beginning. So it's quite a simple 0-20 model that we take zero management fees and then 20% carry at the end.
And is there an upfront amount that you keep from, if the cost of the piece was $1 million, are you selling 1 million shares at $1, so to speak, or are you selling 1.1 share at $1?
So what we do is that, let's say we get a price from the supplier or an artist, we put a markup on top of that.
Which is how much?
Markup is 14%.
14%.
Which covers the cost of holding that painting for 5 years. So within that, there is the insurance fee, there is the management fee, there's a distribution fee, there's a storage fee, and what have you. So currently, if you hold a painting for over 5 years, we as a company don't make any money from that, 14%. That goes to the whole cost. I think the other interesting thing on that 14%, we try to negotiate the price in such a way, because what we do is that we negotiate the price. We put the 14% on top of that. Then we go to 3 independent valuers in the market. We go to Gerjans, we go to Kendris in Zurich. We use a company in New York. So we get 3 independent valuations based on that price plus that markup. And then the valuation needs to be about 15 to 20% above that price that we have for us to syndicate that. So with that, you don't pay any kind of commissions in the middle, because that markup comes from the cost of the painting. That markup covers 5 years period. So anything before 5 years, some of that money goes back to the investors per FCA and SEC rules.
What term do you use for the people who are buying the share? Are they shareholders or
they're
clients?
Investors?
Investors, as opposed to the investors in Mintus, the company.
Yeah, exactly.
Do the investors and the company all win together and all lose together?
Exactly, because we make most of our money at the exit. We have a 20% carry of the profits. So if we make money, if the investors make money, we make money. If investors lose money, we lose money. So we're very much aligned with the investors in that sense.
Where do you see the art market at the moment?
So it is, if you look at the numbers from 2021 to 2022, it looks like it's doing okay. But if you look at the latest auctions and everything else, it looks like very few buyers are buying some incredible, pieces of art. So it's still early days to tell where the market is going to go. But it's also, at the same time, as you say, the froth is gone. So with that, I think the more quality paintings will drive the more quality pricing.
And are you looking to buy from collectors, from dealers, from institutions? What's your target that you're trying to buy from at the moment?
So we're very much collectors, and also some of the institutions like big banks and what have you, and also the primary artists are our three main target supply bases.
Could you talk about maybe categories? We're looking for minimalism because that's been weak in the sort of screen technology, or we're looking, your minimum target was?
We look at $2.5 million.
2.5. So we're probably not doing emerging artists there.
We could put emerging markets into a basket, and so we're very interested in American female artists and various other thematic categories. But we do $2.5 million and above because the volatility really goes more stable at that stage.
And how often are you looking at a 5-year hold versus? I often think the best profits are selling something the next day, statistically, as an investment. Are you looking for a certain kind of holds?
Well, our sweet spot is 5 years. If you can exit the painting before 5 years, because we want to build that credibility with the investors, we can exit them as long as we get to 20% IRR. We think that's a very good return.
What is the argument you're making to your investors that are more retail investors about our world? It's a completely different dialogue. Could you maybe give me a little hint of what that conversation's like?
So I think one of the most important things is that for models like ours to be successful, you have to be able to buy the best painting at the best price. Because if you don't buy the best painting and if the price is not the best price, exit is going to be very difficult. So to us, the most important thing is to have this quantitative analysis upfront. So we have this rule-based model, which is a semi-AI model that looks at about 54 different parameters, from price velocity to the artist's history, to how many times this painting has been in exhibitions, to we do social listening. So with that, we try to analyze as much as possible about that particular painting and that particular artist. And then that engine gives us a bit of an indication of where we are. And it's an engine, it's constant learning. So once we have that quantitative analysis, if the painting and if the price checks, then we take that painting to our investment committee. And investment committee meets on a weekly basis. It's a very methodical investment process with the 2-page proposal on each of the painting, what the investment theory is, how we think that painting is going to behave or not. So we bring all that data to the investment committee, and the investment committee gives an opinion if it is the right painting or not. And then we bring the exit experts. These are the private sales experts in the industry, very, very well-known names. And we show the paintings to them, and we say, it's all very confidential, of course. We say, what do you think? We're thinking of putting this painting onto our platform. And if they come back and say, you know what, I wouldn't go with that painting because that was shot in Latin America, 2 years ago, or that is not going to work. So their opinion becomes very important too, because at the end of the day, most likely that they are the ones that are going to be, selling that painting. So from that point of view, the transparency of the pricing from the very beginning, like what we buy the painting for, who we buy it from, what is the markup that we're putting onto that painting, what are the 3 independent valuations, and what the levels are, and then all the way to the exit scenarios makes it a very transparent process. And because we're FCA regulated and because there is the SEC involved in it, everything that we do is very clearly spelled out, from the fees to there's something, for example, in the UK HMRC, wants to know the UBO analysis of the painting, like what was the ownership history of that painting. So we use a New York law firm to go do that analysis for us, very prestigious, New York law firm. So if we don't know the ownership of the ownership history of that painting, we walk away from that painting. So the system, in a way, because the regulations and what have you, brings that price transparency, brings all the selection transparency. And then with that, we try to get the right paintings at the right price.
That's why you have a Brett Garvey who's got more knowledge in his brain than any supercomputer could do for art. At the same time, there is data there, and you are building a financial product. So trying to merge those two worlds that work in counterintuitive ways.
It just brings a very unique, answers. And Brett is like, he's, one of the most important thematic investment experts actually in the art world, exactly as you say, with all that, knowledge and history. And we take that, direction from him, and then that becomes a very important piece of the selection process.
Brett, we're going to want you on this show next to talk about what all this is, because I think that's a natural next step in, like, who are these people? What is it about? So the Baer Faxt often thinks about solutions. So what is Mintus Solution in solving for the art market and the art world?
I think the number one is that we're enlarging the market. So there are a lot of investors that cannot come into the art market today due to the price levels of these paintings. And also, they're not very experienced. They don't know where to put their money. So what Mintus does in that sense, bring these investors in a very educated way with our selection process to be able to become investors of these rare, iconic paintings. We launched 6 months ago. 99% of our investors never bought art before, which is quite a interesting analysis that we're getting from them. And then they don't have the recognition of some of the artists versus one artist versus the other. So what Mintus does, that eliminates all that friction, from the pricing point of view, from a selection point of view, and then makes it in a very transparent, regulated way to bring that in front of the investors.
So all the art that you buy goes to your house so that you and your family can enjoy, or it goes into warehouses and free ports?
So what we do is that it's initially kept in the warehouses and free ports, but we have these annual tours that we're planning. So they will start in New York, then we'll come to London, then we'll go to Paris, most likely Zurich, because we have a lot of investors from Switzerland, then go to Hong Kong and Singapore, and then they'll do a tour. But one of the most important things that we're working on is that displaying that artwork in a public environment where people can enjoy that artwork, so it's not stuck in some sort of a storage facility.
What's the scalability?
So in 5 years in our plans, we want to get to $2.5 billion asset under management.
That, again, will make you one of, if not the biggest buyer of art in the world. That's why people from the Baer Faxt, the dealers, the advisors, the collectors, need to understand what's going on, because if that happens, the other, then you're a whale as a buyer, and then of necessity as a seller. So my question there is, once you have $2.5 billion that you've bought, which that drives the market, that's driving demand, right? You would agree?
I would agree, but again, then goes back to our principles again. So when you have the investor in mind, when you're doing this for investors to win first, then you're winning first. Then again, what it does, that transparency, that pricing, that clarity of the selection process actually, in a way, brings a level of transparency into that market probably would enjoy.
I just want to thank you for being really open to hard questions. And I think that gives you more credibility in our community to really take on the questions and have the answers there and not be shy of them. And that's really the part of the art world I find most interesting, is people with passion and commitment and pride in what they're doing and able to stand their ground. And thank you so much for taking that one-on-one.
Thank you so much for having me. It's always a great pleasure to speak to you and try to answer your questions.
And don't transact without the Baer Faxt.